The following is a presentation of TFNN. It is now time for the Tiger Technician Hour with your host, Basil Chapman. Call now, toll free at 1-877-927-6648. Internationally at 727-445-1044. Now, Basil Chapman.
Hi folks, Basil Chapman, Tiger Technicians Hour on this 19th day of November. My pleasure to be here, and certainly great to be the next one up after some really good hours, starting off with John Logan, going to Steve Rhodes. I take this hour and, of course, pick a program all the way through the day. And let me just get this 120-minute chart. There it is. So what we're looking at here is in high def. This is amazing. Look at these charts. Aren't they beautiful? This is leg D and probably a peak D if there's no new high above the round number 2054 that was made in the E-mini, the December E-mini. Gosh, it'll almost be time to move to March of 2015 contract. Well, there we are, and it's holding the little pink moving average support right there. Hasn't gone to the 2033 9-period moving average. It will almost certainly be testing that come the next a few days going into next week, but at this particular point there is still internal strength, and that's what I was talking to my subscribers on my opening call. We have only long positions. I wanted to start setting up the short positions this morning, and then I thought, you know what, there is just enough internal strength and residual strength to suggest that better prices could be coming today or tomorrow. And not only that, I wanted to see how far. Let me show you something really interesting here. Well, now, let me do the numbers. That's even better. Dow's down 41 at 17,645. The S&P's down 9 at 2,042. Comp index is down 41 at 4,661. The gold contract is down 17, 11.79. I'll talk about that in a moment. Silver's down 18 cents at 15.98. Platinum's down 17, 11.89. Copper rebounded. It's at 302. Nice little bounce. How to get off that $3 level? Let me tell you, it was real close to breaking below $3. Crude oil is up just to 7 cents at 74.5. You've got bonds down 12.30 seconds at 141, 10.30 seconds, and you've got the dollar up 5 cents at 87.69, holding that 9-period exponential moving average. Now, let me go one step at a time. In fact, let me do this because it just clears it up. And this is what my subscribers get every day. Well, it's usually a little small. I've made it nice and big because some people say that we like to be able to print this out, and there's a little bit too much black. So there it is. This shows the Dow from the 19th of September at 17,350. Even though you might have been calling for higher prices, that's in certain as certain analysts were looking for higher prices, the Dow slumped. It went down to 15,855, one of the deepest corrections we've had in quite a while. 1 month later, on the 15th of October, it reversed. We would actually shorten my opening call on the way down via the S&P, one of the ETFs, one of the 3 times the ETFs to the downside. Then we switched and we went to the long side. We are still long this ETF, not the Dow. I decided because of IBM that when it had that horrible day on the 22nd, was it? On the 22nd of October, I decided that it was better to be safe to be in the S&P. Even though the Dow should move in tandem, I went to the S&P. And in fact, what we got now is that the Dow is gone. In the Chapman wave methodology, what you look for is you try to identify the most obvious lowest low bar. And from that, you merely want to count each successively higher peak. And then you count them alphabetically with uppercase letters. Then it goes peak A, peak B, second peak. Peak B was 17,410. Peak C was 17,638. Peak D was 17,705. And then, and if you didn't use these particular techniques, the tools that I add, my huge Sears and Roebuck, this is the old Sears, not Sears Holdings, which is a pathetic, absolutely pathetic company. But the original Sears toolbox, and I have this plethora of tools that are needed. You might need the Phillips screwdriver just at one moment, and you might not need it again for weeks. But you need to have it in your toolbox. Now, what I'm looking at is after that 8% or so decline, we then had a very, very strong move. But you know what? From the 17,350 high of the 19th, this is only yesterday's high of, I didn't even type it in, of 17,735. It's only 400 points, less than 400 points higher. It's not a big deal. It feels like a big deal because look at the spectacular move that we've made to the upside, number one. Number two is look at the way we've had only little doji candles here. This is the most number of doji candles in a sideways move that I can recall seeing in the Dow daily chart. Oh, for ages and ages. And the number itself might be even a record of sideways small candles. I'm calling them dojis only because we opened and closed pretty much at the same level. Hey, if you want to learn about candles, if you want to learn about different techniques, Steve Rhodes got a great workshop coming up. It's a whole series. It's like 7 weeks. Check it out on the front page of TFNN. I believe there should still be room. And it's just really something that if you're into technical analysis, this could be a really good opportunity to garner even more knowledge. Now, I have a particular pattern that I developed way back in the 1980s. It's called the Chapman Wave Stork Leg Formation. And what it says is, I'm not talking about Chapman Wave legs to the upside. This is just one huge move that goes to a particular point where it suddenly stalls. If there is a particular pattern, I call it an oval pattern, that forms, at that point you can think of it as a stork that stands on one leg. You know, this very heavy-bodied animal stands on this little spindly leg, and the wind blows and everything, and the feathers fly, and it's just standing there vertical. And then what happens is, tucks one leg under the other, got the body, and if there's a breakout to the upside, it starts the neck formation. After the neck formation, there is a pullback. It makes the head and the beak says there should be a price move back to at least the top of the oval. In this case, all that would happen is you'd get back to the 17,705 level, which we're under right now. So this is a very interesting period, and the way I'm going to describe it is, in the Chapman Wave methodology, when you get to a D, but especially an E and an F after recycling very quickly by the third bar, a bunch of things can happen. And you'll see that on the 19th of September at 17,350, that was a peak E, a little doji candle. It was actually like a kind of like an evening star. But most importantly, that became the top. And then the price went under that purple line, the 9-period exponential moving average. That purple line is at 17,593. Today's low so far, and what I'd said here every day, I give this little a little paragraph. Underneath it, I give another updated paragraph, and I send it off. It's just one of the 6, 7, 8, 9, 10 charts that I send out every day, as well as the different pages that are sent to my site, the Chapman Wave. That's the opening call. That's my daily newsletter, starting from about 6:30 or 7 o'clock in the morning, sometimes even early on weekends. I send them out Saturday, Sunday for Monday, and you can review them beforehand. It's always great to get them and be able to assess what you personally think of what's going on, together with what I recommend looking at. And then what happens is I also show you, based on other factors, in my opening call, I put in, look, this is the volatility index 120-minute chart. It made a peak D from 14.73 and a pullback to 13.13. Today's high is already 14.78. It has gone above. If there is going to be a failure pattern, and when you think that you've gone in the VIX from 12.38 to 14.78, that's 2 points, that is 18%, what is that? 14%, that's a huge move in a very short period of time, and yet the Dow is just an eye blink away from its all-time high. That is showing tremendous nervousness. If that nervousness is generating higher highs and higher lows in the volatility index, we should see no leg D to the upside in the 120-minute chart of the Dow, but we should see no new high, nothing above 17,735 in the Dow, nothing above 2,056.08 in the S&P over the next coming days. And yet you've got the Fed speak coming out at 2 o'clock today. My suspicion is that we have just enough residual strength based on some of the sectors that have gone in their daily charts to peak B, not even yet to a C, or C, not yet even to a D. We were patient enough to wait for the E-mini to get to the D, even though the E-mini, the Dow and the S&P had already made peak D when the E-mini made its peak C at 2,043.75 a few days ago. That was on the 13th. Now we're looking at a peak D, or leg D at least, in the E-mini, and I'm suspecting that you've got things like the XLF, which is trading at 2404, quite a bit away from the 2431 high, that somehow or other it'll at least attempt to break above yesterday's high of 2422, try to get to the 2431 level. Does it go to a C? Does it even go to a D? Or does it double top here and fail? We don't know, but I am thinking there is a chance that we could have just enough residual strength. We actually went long one sector this morning, 200% long of that in that sector, based on the strength, the very same strength I'm talking about in the XLF, and that says that there should be, in fact, a leg C to the upside above its most recent high. That, because when you go to all-time highs in the Chapman wave methodology, it is so rare. And when I say rare, I'm talking about 2%, 3%, that in the history of the Chapman wave, there are, in fact, times when all-time highs are made because of the weekly and monthly charts having much greater force to the downside when they turn, and the daily does not get to a leg D, E, or F. It fails at a B or a C. It's so rare. It does happen, but very rarely. And I don't think it's going to happen this time. I think we will squeak to the upper levels. Anyway, that's my thinking right now. But we are starting to plan. Believe me, we are starting to plan to look at the short side, because right now we've been up for so long. This is 20. I should have counted it. I'll do it right now. We should know. This is, in fact, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15, 16, 17, 18, 19, 20, 21, 22, 23, 24. This is the 25th session. We've had one ugly candle in all that time. 5 years historically, another time that you've seen any of the major indices, maybe the Qs have done it, but not the S&P and the Dow, to all-time highs. 20, whatever I said, sessions, and one ugly candle. Gosh, that is amazing. So I'll be back. Basil Chapman. Dow's down 29, S&P's down 8. We'll be right back.
Today, it's hard to tell if the economy is coming or going. Regardless, I want my money going in the direction I choose. If that's your stance as well, then you want to know how Everbank can help keep your money thriving just the way you want. Is growing your money a priority? Everbank is committed to a yield pledge promise to pay high yields on your checking, money market, and CD balances. Looking to diversify? Everbank ingeniously developed accessible ways to spread your money around the world into foreign currencies and even non-FDIC insured metals. And when it comes to your wealth, they bring a highly experienced and global perspective to help you manage it. Everbank's financial philosophy flies in the face of the status quo. They believe your money's performance should not be determined by today's economic circumstances, but by the drive to rise above them and create opportunities that favor your objectives. If that excites you, like it does me, call 1-855-750-4051 to find out what they can do for you. That's 1-855-750-4051. Call them today. Everbank is a member FDIC and equal housing lender.
TFNN is excited about our new software charting program, The Art of Timing the Trade Charts. In collaboration with Tom O'Brien and using his best-selling book, The Art of Timing the Trade, Your Ultimate Trading Mastery System, David White has programmed an outstanding piece of software that will complement any trader's methodology. Using this first-of-its-kind program, the Art of Timing the Trade Charts allows you to scan thousands of stocks for Fibonacci formation setups, including Gartley's, ABC's, butterflies, and much more. The Art of Timing the Trade Charts is designed to help you when scouring the markets for stocks just beginning to form the trading patterns that many investors spend days, weeks, or even months searching to find. And right now, we're offering licenses available at only $79 a month. We are so confident that you're going to love this new charting software that will even give you a 30-day unconditional money-back guarantee. Don't miss out on this incredible new piece of software. Get your copy of The Art of Timing the Trade Charts today by visiting TFNN.com.
Many of our new listeners have heard about the Tiger's Den, but wondered, what exactly is it? The Tiger's Den is a lively community where professional traders and investors can meet, exchange ideas and information in a comfortable, moderated atmosphere. Hear all of your favorite TFNN shows, plus see all the charts as they happen live during those shows, and have access to all those charts. You can test drive the Tiger's Den absolutely free for 30 days. It will greatly enrich your knowledge of these markets. Details on the Tiger's Den are on the front page of TFNN.com.
The Path of Least Resistance is David White's daily trading newsletter, and if you're looking for active trading ideas, then now's a perfect time for a 30-day free trial to this powerful daily trading advisory service. David uses his years of trading experience to offer his subscribers his trading ideas each morning in his Path of Least Resistance newsletter. Using a combination of equity trades along with options, David keeps his subscribers up to date with all pertinent market information with intraday afternoon updates when warranted. Don't miss out on this great chance to get a 30-day free trial to David's daily newsletter, The Path of Least Resistance, with no obligation to pay anything. David has been delivering solid recommendations for his subscribers recently, and if you'd like to see the type of newsletter he delivers every morning, then visit the front page of TFNN, and you'll find The Path of Least Resistance under Trading Newsletters. For all the details and to start your 30-day free trial today, log on to TFNN.com now.
With the launch of Tiger TV, TFNN has brought our programming to the next level. With Tiger TV, you can gain access to each host's charts and computer screens as they host their daily stock program. Whether it's Tom O'Brien, John Logan, Steve Rhodes, Basil Chapman, David White, Larry Pesavento, Andy Hecht, Thinkorswim, or Terrell Martin, you can catch all of our technicians hosting their programs live and archived on Tiger TV for your viewing pleasure 24 hours a day, 7 days a week. If you haven't checked out Tiger TV, then visit TFNN.com and see what you're missing. Basil takes your phone calls now. Toll free at 1-877-927-6648. Internationally at 727-445-1044.
Hi, folks. Basil Chapman here. Just got a note to say that I missed it. Yes, very good. I missed the peak over there going way back. So that should be an E. So that's your D, and let me just do this, fix it up. So 450.90 and 450, and that's an E. Okay, so there we go. There's the E, not a D. Thank you, Steve Rhodes, checking me out there and correcting me. Good. That's with the Chapman Wave methodology. Fortunately, I remember us getting that top. But I had to redo the count because, remember, I lost a bunch of my notation. So that might have been when I was doing it very quickly once. But thank you anyway. So there are a couple of good questions here in the den. I wanted to do this because this is the period where I would be starting to look to see what defensive stocks are likely to garner some interest if there is some kind of a consolidation of the recent gains starting from now even because, look, we looked at Steve looked at the IWM just now. IWM made a peak D at the other day at 118.25 in the Chapman Wave on the 13th. It's pulling back quite sharply. I think it's going to be really difficult to do anything but have a bounce from 114s to maybe the 117s. And then I think it takes a bit of a breather, and there's two doji candles in the weekly chart. And the last one says, if there is a close this week below the low of last week on the IWM, which is 116.37, there's a good chance that there might be an intra-week pullback next week and then a bounce, and that would say to me 113.88 is going to be absolutely critical as support in the IWM. So slowly, tops are made rotationally, bottoms are made very often as coincident lows, or at least within just a few days of one another. Now let's go back. So now I want to look at Verizon. Verizon made a peak E with a Chapman wave silent doji after that. So it went to a 51.73 high on the 14th. Let me type that in. 51.73. So now what we need to do is we need to look at the weekly chart and say, hey, what's going on in the weekly chart? Well, if you look at the weekly chart, if Verizon and the monthly chart together, let's put this, here's the weekly, here's the monthly. Let me just take this away. This is the 120-minute chart. It says sideways range, trading range, probably between somewhere here, between 49s, it's at 50.55 right now, between 49 and 48, 49.30 to maybe 48.20. If it breaks under 48, that's not a good sign. But if it goes somewhere between that level and 52.80 to maybe even, because if it gets to 52.40 and holds, there's a weekly chart for 2 out of 3 sessions, daily sessions, there's a good chance it's going to try to go to the top of 53.66 of that inverted Chapman wave Roman candle. So that's the trading range. That's a possibility. That's number one. Number two is the monthly chart has not great technicals, but they're technicals that say the 9-period moving average of 49.65 is held for quite a few months now, since it broke above it back in May. And we'll see 49.65 can hold in the month of November if there is any pullback a little later on. So that is one stock that if you're looking at a dividend, let's just say the dividend between 4% and 5%, I'm not sure what it is, but let's just say it's about that. Well, 4% would take you down 2.5 points. So you're giving up 2.5 points to be able to garner that dividend, but you better be in there for a while to get that dividend. I like to look at dividend stocks as capital plays. I want to see capital gains as well as dividend gains. I don't want to take a risk of just the dividend and see my capital go down 10%. That's well, I just don't. I've never understood that. Now some people do it fantastically. I just don't see the benefit. I don't want to sit there worrying and saying, "Good grief! I put in X amount of money and it's down 10% to 12%. Whoa, isn't that great? I'm getting 4%, and I better stay with this darn stock. And it could go down 20%, and I'm still trying to only get 4%. I just don't. To me, that kind of thinking just doesn't make sense. Now, that's just me. Other people happen to trade dividend stocks. I mean, not trade. They position play the entry points, and they do it in such a way that they understand the risk, and they're quite prepared to take that risk. I don't see it. Well, if you're holding it for years and years and years, maybe it'll make it up. So now let's go to, so that's Verizon. Now the question is, would I be buying it right now? I would say I'd prefer to buy it just between 50 and 49.5, maybe give it a point and a quarter of a stop. I still would put a stop in and then see if it's going to work its way slowly as it's done so often to the top of the line. Let's look at telephone. Telephone is a little bit better. A little bit better technically. The chart pattern is very much the same. Hey, I'll be back straight after this break. Dow's down 30, S&P's down 8. We'll be right back. Very important session coming up after 2 o'clock today. Be right back.
In quiet markets, investors search for new trading opportunities. We'd like to introduce you to a new product that provides opportunities even in flat markets. Nadex, the North American Derivatives Exchange, is a new and innovative Chicago-based exchange registered with the Commodity Futures Trading Commission, and unlike most other exchanges, Nadex allows you to trade directly through them with direct market access when using their trading platform. Nadex never charges a fee to use their platform, which even includes real-time charts and full customization capability. Nadex's unique short-term binary options allow traders and investors to capitalize on strategies even when the underlying markets are quiet. Nadex's innovation has allowed them to come up with a line of unique trading products that are unavailable anywhere else. See how it works at nadex.com. That's NADEX.com, or click on the Nadex banner on the front page of TFNN.com. Futures and options trading involves risk and may not be appropriate for all investors.
platinum, grains, crude oil, gold, copper, cattle, hogs, gasoline, natural gas, coffee, cotton, cocoa, and sugar. These are just some of the commodities mentioned in the most recent issue of Andy Hecht's Techno-Mental Commodity Report. Andy publishes his weekly newsletter every Thursday morning, where he breaks down the commodity market and provides his subscribers with specific trading recommendations based on his trading methodology. By signing up for a free trial to the Techno-Mental Commodity Report, you'll get a full 30 days to try out this powerful newsletter service and see for yourself the types of trades Andy has recommended for his subscribers. When you sign up for a 30-day free trial, you're under no obligation to pay anything. And should you decide to continue, you will lock in the low rate of only $79 a month. Sign up right now for the Techno-Mental Commodity Report and make sure you're ready to catch the next big trade in commodities. For more information and to get started today, visit the front page of TFNN.com.
Daryl Martin coined the phrase diagnostic trading, and we're happy to announce that his diagnostic box spread analyzer has finally been released. The Diagnostic Box Spread Analyzer helps you easily identify the best box spreads on Nadex in seconds, plus you receive access to the diagnostic deviation levels, as well as step-by-step training videos teaching you how to trade Nadex spreads so you can quickly master the mechanics of this simple yet powerful trading instrument. By pulling live data from the Nadex exchange, the Diagnostic Box Spread Analyzer does all the math for you, calculating risk, reward potential, distance to break even for both outright spreads and spreads used to hedge the underlying market. Visit the front page of TFNN.com today to get your 2-week free trial to Daryl Martin's Diagnostic Box Spread Analyzer and gain access to the valuable information it can provide when trading the Nadex box spreads.
Who says you can't take it with you? TFNN says you can. With your mobile device and TFNN's live radio streams, TFNN has put it all in the palm of your hands. No special apps to download. No subscription fees for live radio or Tiger TV streams. We say you can.
Each and every time that the dollar ticks higher, S&P wants higher price. Each and every time that the dollar's ticking lower, guess what? S&P wants lower price. Dollar, the metals, and the S&P are going tick for tick.
We say you can. The Tiger Financial News Network. Smart investors and professional traders know you can. TFNN.com. Educating investors. This segment is brought to you by Think or Swim. For more information, just click the Think or Swim banner on the front page of TFNN.com.
So we're looking at the telephone, AT&T. T is the symbol. Before we're looking at Verizon, VZ was the symbol. And what I'm looking at here at 35.47, down 25 cents, is that I discussed this on air and with subscribers previously that back in 2007, the high that was made at 42.97 in September, and then the retest just a little lower at 42.79 in December, was a failure pattern. And in fact, what happened is that telephone came all the way down to 20.90 in October of 2008 before starting a pretty decent rally all the way to the most recent highs of 39, round number high, back in 2013. But basically, since 2012, it's gone sideways. So when I look at the larger picture of what's going on in terms of the telephone the communications companies, there is a lot of pressure. I had someone come to the door yesterday. It surprised me, from Verizon, wanted me to get Fios. And I said, I've got Comcast, I'm happy. Oh, it's much better, it's much better. I said, I've got them both. I have Verizon, I have Comcast. I like a landline. I need a landline. And I said, you got a real good spiel there, but I'm not doing anything just yet. Not only that, although I'm now thinking about it with the junk mail that keeps coming, but I didn't want to change my email address. So I think there's a lot of competition. Not only that, Skype, there are so many different forms of communication. I'm not sure how these guys are going to stay in business. Yet when I go to Verizon to have a question, of the blue, I'm standing in line like at a bagel shop. I'm holding a ticket that says number 433, and I'm waiting in line to get my service. So they found a fantastic, that really was the first big a la carte thing, even before the airlines. So I don't know if I want to hang out with a dividend stock that has the potential to someday, fairly soon, I think, of really getting hammered in the profits. I think so. But AT&T is the better one out of the two. It's just holding well. It's in the middle of a range, and it should be between 36.5, 37, and 32, and stay there for a while. So I think that's probably the better one out of the two. Whoops, didn't mean to do that. And then it had the same failure at the peak C and peak D, but that was a rising level, and what's happened is just gone into a trading range. It did not make new recovery highs. So that's that. Now, the weekly chart shows a little bit difference. It shows that it's really working very hard to push into the mid 36s. So we've got to watch this real carefully, because under 35 it says, no, I'm making the trading range lower between 35.5 and 34.25. That's kind of the way I'm looking at it right now. Now, let's go to there were some other IYR, good. That's also a dividend area. So IYR is the iShares Dow Jones U.S. Real Estate Index Trust, kind of made up with REITs and commercial, I think more commercial properties, and it's made a beautiful cup-shaped pattern, a U-turn beautifully from 74s down to the 69s, 68, 69 area. Now it's made a peak F, and it's just kind of stuck in the sideways range. So I'm going to be watching this closely, because if at any time in the next 2 weeks it closes under 74, IYR at 75.16 right now, down 35 cents, I'm looking at it and saying, okay, we're going to the lower range. We're going to start to test the 74, 73 area, and that's going to be the upside is very limited. If for any reason, I don't care what the story is, it doesn't even have to close there. If it pops up above the 76 round number high that was made on the 6th of November, and it hangs around there for 2 out of 3 days above 76, I think that's going to be very good, and that would suggest strongly we actually have a leg B in the weekly chart, and we will have 76.21 was the all-time high. So any pop above that says, woohoo, double top maybe in the monthly, but still very good action. So let's go to George in New York. George, how are you?
Basil, good morning. How are you today?
I'm well, thank you very much. Watching my staples.
Yes.
You wanted to look at?
Staples.
All right. We're looking at SPLS. Trading at 13.3, it just happens to be up $1.06 when in fact just yesterday it was testing the 1258 level and trying to get to the 1248 200 period exponential moving average after having made 2 doji candles and a very sharp decline, and then out of the blue they came out with news that was pretty much better than what was expected, I believe.
Yes.
And I have to change this from a down arrow because it did not close as I thought it would under the MACD did not cross negatively. So I have to change this to a plus sign and then put another plus sign on this brand new spike to the upside. Now, what's so fascinating about it is that everything that you were talking about and what we had discussed said that there was an improvement to the economy and that should be reflected in price of staples, but they had done so many things wrong. But at the same time, they had embarked on, I must admit, I'm kind of getting impressed. I'm not yet fully impressed, but I'm becoming impressed with their marketing as far as emails is concerned. For those people who are Staples, I don't know if it's called the card members or point members or whatever, reward members. And I think it's improved. So they're finally starting to think profits. They've cut. I had 3 stores within about a 2-mile radius. Maybe a little more, maybe 3-mile radius, which is crazy. Who needs 3 stores in a 3-mile radius?
I agree. Yes, they
in fact, I'm sorry,
themselves.
it was actually 4 stores within a 3-mile radius. Well, now they've cut it down to 1. That's the way not for me. I prefer the 3 stores because it's nicest at the spur of the moment to go down. But they didn't have much at the other stores. There were more copping places, and they had some of the goods. Most of the stuff I needed they never had. So it's better to go to the major store. And that's kind of what they did. They just closed those things. They must have had a lot of costs involved in paying off for the rentals and all that. They're probably still going to be paying the rentals until they can get somebody to sublease. But you know what? I think that they are definitely doing something better, and I want to hear what you have to say.
Well, I definitely agree with you on all counts. And of course, I'm long into the stock, but basically I have free shares because I have it for so long. But in the interim, of course, because I know the company and I follow the company, I recently got into Leaps on a 2016 basis.
Oh.
Because I think they're going to repair themselves as they're going along. They've closed 127 of the 170 stores thus far. So you're saving a lot of overhead there. The same store sales are down 4% year over year, but their online sales are up 9% year over year.
And you had pointed out that the online factor has really been improving a lot.
Yes, and they are if I'm not mistaken, they're the number 3 online retailer behind Amazon and another one. So they do extremely well online. And if you go to any, I would say, department store, if you go to their offices or even Home Depot or Lowe's, you'll see they use Staples supplies.
So here's a thing that I had.
So their commercial business is very good as well. That's my point.
Right. Now, do they lease all their properties or do they own properties?
That I don't know, and I've never dug into the analysis on that, to be honest with you. I just look basically at their balance sheets continually, the sales continually. Their sales steadily for the last 10 years have grown almost 5%. The book value's increased 5.5% a year.
Which, when you think about it, is really kind of a pathetic number, but in relation to what others have done, that's quite good.
Well, correct, because it's a mature company now, like IBM is. And what happens on multiple decades now, they have to reinvent themselves. And this is the process, what they're doing right now.
Yeah, it's so interesting you say that, George. I was at a wedding over the weekend out there in the area, Beacon area. That's also Fishkill area.
Yeah.
And beautiful,
nice area
beautiful. Oh, beautiful! Looking out the window at the Hudson River and all. Anyway, and I was speaking with someone that I'd met. I met him the very first night that I was there, but then I never even got to speak to him after that for the next couple of days. Mm-hmm. And but I wanted to speak to him because he was working for IBM, had worked for IBM for 35 or 40 years or something, and he was in an area that. His specific area was in what happens to companies, huge companies like this, when major things like the Tokyo earthquake occurs. How do they change product lines? How do they recoup? How do they move inventory? What do they do? Just big things that he was involved in. So I said to him, IBM is looking terrible. And he said to me, this is exactly your point. He said, IBM is so big that it takes us a few years to identify where we want to put the money. And then when we put the money, we're looking 5-7 years ahead. And I'm saying to myself, wow, this is exactly what is. You can see that in the chart of IBM, that they are going through, they are not breaking down, but they are holding very well. I mean, if you're looking at a shorter term over a period of a couple of years, then the chart looks horrible. But if you're looking at it historically, from way back when it was in the 60s and 80s, having gone to 215 and now at 161, you can understand that consolidations take a long time. And what happens is that when they finally get it right, they want to get it right for a major, major move. In other words, it isn't just an inflection point. It is a pivotal moment that is taking the company back on a new trajectory, or at least an upward
trajectory. And in the same camp, you have General Electric as well. That's reinventing itself.
And General fits in exactly the same thing. And they've probably started to turn the corner already. That's why it's in a very big trading range. So I love your description and your analysis over the period of months now, a year in fact, that we've been looking at staples. But there's one thing that's really important to staples, and that is just on a purely price projection. The weekly chart, which is usually the one that's most impacted by a sharp move down in the daily chart, has repaired itself beautifully. Funnily enough, it's now the monthly chart that has to produce enough energy for it to go from the 1386 level to about 1420, so that the 200-period moving average at 15.23 can become a focus. So that's kind of what I'm looking at. But on a shorter term, now this is another reason why I did not want to go to the short side yet in the market. There is just a chance, depends on how the market relates to what's happening this afternoon, that stocks like a GE, like a Ford, like a even a General Motors and a Staples and some of the stocks that are holding really well, like an Alcoa, that are heavy-duty cyclical stocks, are not holding up here because this is just an upward spike within a bear market. They're holding up because, and this is something that I ponder and I think and I look at charts a lot to be able to assess. But this tells me that there is a chance that the next pullback might not be as deep as what people think it would be, and that in fact, the weekly charts are telling me focus on those weekly charts, because if they only pull back a little bit, and in 3 weeks' time there are new recovery highs in many of the weekly charts, that would say there's a rally into early January. So Staples, in a sense, is kind of confirming for me that the economic turnaround that I've been expecting for quite some time, that's going to, at some point, we're going to suddenly get a flurry of activity in the joblessness number going down and jobs going up.
Yes.
That's also where I sometimes get very nervous historically. Whenever we suddenly see it and economists say, great, we've turned the corner, we're in a bull phase of jobs, boy, that's when you've got to be careful. So,
right. And I think the risks involved still is on the global, what's going on in either Europe, which is basically, borderline non-growth, Japan's announcement on their flash GDP recently, bringing it into a recession.
I must tell you, I think Japan...
And then, of course, we have what's going on in the Mideast. That doesn't help us.
Right, but Japan, I think, is holding up very well. I don't see it in the chart. The chart says to me that the Nikkei is holding well enough that it could also go a little higher.
Can I hold on for one more question?
Yes. Okay, so
I wanted to look at Apple as well.
Oh, Apple, I forgot to even talk about Apple. Whoa, one of the major NASDAQ stocks. I'll be right back with George. Basil Chapman. Dow's only down 17, S&P's down 5. We'll be right back.
You take a hands-on approach to managing your investments, and whether you're bullish or bearish on U.S. Treasuries, the ETFs from Direction Shares are there to help you magnify your perspective. Bull ETFs for a rising market and bear ETFs for a falling market. Direction Shares gives you the tools for both sides of the trade. Discover how we can help at DirectionShares.com today. An investor should consider the investment objectives, risks, charges, and expenses of the Direction Shares carefully before investing. The prospectus and summary prospectus prospectus contain this and other information about Direction Shares. To obtain a prospectus or summary prospectus, please contact Direction Shares at 800-851-0511. The prospectus or summary prospectus should be read carefully before investing. An investment in the funds is subject to risk, including the possible loss of principal. The funds are designed to be utilized only by sophisticated investors such as traders and active investors employing dynamic strategies. Investors in the fund should understand the consequences of seeking daily investment results, understand the risk of shorting, and intend to actively monitor and manage their investments. Distributor Foreside Fund Services, LLC. When you first learn something in life, you have the most questions as you begin to apply that knowledge, which is why Steve Rhodes came up with the idea for his 7-week trading program. It all begins Saturday, November 22nd, when Steve Rhodes will host a live 3-hour morning workshop where he'll teach his attendees the precise methodology he uses when placing trades. You'll then receive 6 weekly updates each Monday morning discussing the possible alerts currently setting up in the market. Steve will then bring everyone back together for a final 3-hour live workshop Friday, January 9th, where he'll discuss the methodology that went into each of the 6 weekly updates, making sure that you're confident in applying what you've learned so that you can begin navigating the market on your own. You can sign up right now for this entire 7-week trading program with Steve Rhodes for a one-time payment of only $395. If you're a Mastering Probability subscriber, then you can save an extra $100 off that price. For all the details, visit the front page of TFNN.com right now.
Tom O'Brien's weekly gold letter, The Gold Report, gives complete and concise coverage of the entire gold market. Inside, you'll get Tom's commentary on gold, the dollar, the rand, the bond, the XAU, the HUI, and detailed coverage of nearly 25 mining stocks. He'll give you the entry price, price target, and stop price of each stock trade. The Gold Report is a long-term newsletter where the focus is on building real wealth through the management of a successful portfolio of gold stocks. With a lifetime of knowledge and almost 12 years of writing his informative weekly newsletter, The Gold Report, Tom O'Brien can provide you with the important market information to help you make better trades in the gold market. Don't let the next bull run in gold pass you by. To get a month-long free trial to The Gold Report, an $85 value, visit the front page of TFNN.com today.
Since 1984, Basil Chapman has been using the Chapman Wave methodology to advise traders of his expert market opinion. While originally hand-drawing charts from the late 1970s into the 1980s, Basil noticed that prices under most circumstances virtually always had a certain number of legs to the upside before declining sharply. Later, Basil found that computer software, which included the standard market technical indicators, enhanced the degree of accuracy in calling price turns, as well as market trend calls. Thus was born the Chapman Wave sequence. Using the Chapman Wave methodology along with other indicators, Basil Chapman advises his subscribers of his expert market opinion each market day with his opening call newsletter. Right now, you can get a 2-week free trial to the opening call, Basil's daily trading newsletter, by visiting the front page of TFNN.com. Cancel at any time during that trial and pay absolutely nothing. Get your 2-week free trial to Basil's newsletter, The Opening Call, today by visiting TFNN.com.
Catch Larry Pesavento, a 40-year veteran trader. He uses pattern recognition, Gartley's, butterflies, ABCs, and Fibonacci in order to trade these markets. Trade what you see. Next on TFNN.
Hi, folks. We're on with George in New York talking about staples and other things. We're about to move to Apple. The Dow's down 18, S&P's down 6. And I just wondered for Stephen, the email I just got. Hi, Basil. Great programs. As always, question on the peak count on the S&P. I have the top on 1024 at 965. Well, the SPY is on the 24th at 196.49. That's what I get, and I do get a peak A there, and that's what your question is. Yes, I got the same as you. 49 and then 45 is the next day. So I'll go through the question again later on when I have time, but I just wanted to get back to George. So, George, just before we're about to, this is the last segment. I don't want to run out of time.
Okay.
So let me just do one thing, if you don't mind. I just want to tell folks, don't forget you've got Steve Rhodes' absolutely fabulous 7-week workshops coming up on Saturday. Check the front page of TFNN. It's a really good opportunity for very, very little when you think about the amount of hours that have been put into this. So I just want to talk about that. And then I want to just say VIX index. Now, the VIX index has gone up very sharply and yet the Dow is within an eye blink of its all-time high. So is this a fake out, or is this the real thing? Is this a hint to say, a heads up saying, hey, watch out, you've got your leg E's and D's in your daily charts, you better be careful because we are really close to a move higher? Or is it saying, hey, this is an emotional response by folks who are very nervous about the new highs, and when the market makes even higher highs, this is going to just plummet below 1238. We won't know until the Friday's close, because I really want to look at the weekly chart, but I'm just going to say a VIX in the 15.30s is going to say market is going down, be careful, at least very short term. And I want to just leave it at that. VIX at 1453 right now. If it breaks under 1390, then it says all sailing, all clear for the sailing right short term. All right, let's go to Apple. We've got another minute or so. Apple right now is in a leg D in the daily chart. I've got a leg G/C with a potential doji coming up in the weekly chart, and the monthly is just screaming in a leg D to the upside. Yeah, so.
Oh, the question is this. I went in on December calls and with a 110 strike.
Okay.
So the question is really here, is the upside, how much more upside I could see out of this.
Okay, so let me
I'm
just
debating maybe to even exercise it, because I think going into 2015 it may be pretty good.
You know what? I think that together, probably GoPro is going to be a successful a trade in terms of just going into this holiday season. Apple is still the place to be for holiday sales. It's the safest, it's the easiest. Parents can just do it, it's there. So I suspect that between 111 to 110 support and 117 to 119 on the upside, that's kind of the boundary right now that I'm looking at. I would expand it either way, and I will know a lot more by Friday's close. So by Monday, I'll be able to give, I think, a way better assessment of Apple, because I'll know whether it's made a peak D or E top. The MACD is good. Stochastics at 92%. But I wanted to spend time tomorrow, Thursday, going through a bunch of things. I want to talk about one of my indexes that says, be careful. There could, in fact, be quite a deep pullback when it comes if certain things happen. And those are the certain things I want to spend time on. Just to be safe, right now, I'm going to say to you, for your interest, 112.54 should be really good support for Apple, and 111.10 is the next support. If it breaks that and holds under that level for 3 out of 4 sessions, that weekly will be impacted. I just don't think it's going to happen right now, but it's worth noting that that would be the level to watch.
All right. Appreciate it, Basil.
Thanks for calling. Always appreciate yours. And I got folks that Dan saying thank you for your analysis. They really enjoyed it. So, folks, Larry Pesavento coming up. I gave you the parameters that I'm looking at. We are still holding long positions. I'm real close to start implementing some short positions. Have a great day, and I will be back tomorrow.
David White's newsletter, The Technology Insider, is focused like a laser on finding the next big things in technology. If you had invested only $10,000 in Microsoft in 1986, you'd have been a millionaire by 2000. Disruptive technology like Microsoft's is the key to these massive long-term profits, and the Tech Insider is the vehicle from TFNN to capitalize on these opportunities. This is the go-to newsletter that identifies, monitors, and profits on mostly little-known cutting-edge companies with great long-term prospects. David's experience is as an inventor of Emmy-winning animation products for TV and Hollywood that propelled a company public. Match that with 14 years as a full-time trader, and he's uniquely qualified to guide you through the light-speed world of ever-evolving high-tech. If you're ready to ride the next big technology bull market for less than $40 per month, log on to TFNN.com and get your 2-week free trial to the Technology Insider. Get in on the ground floor of the next big thing today.
This is TFNN.